The Conservatives have proposed raising the tax-free pension allowance through a triple lock plus if they win the general election on the 4th of July. My name is Robin Moore and welcome to today's episode of Tax Tidbits, where the government have announced plans for a triple lock plus, an extension to the existing triple lock that decides on the annual percentage increase to the state pension. Under the current triple lock, the state pension increases by the highest of either average earnings, inflation, or 2.5%. As a result, the state pension increased by 8.5% in April due to the high rate of inflation. However, as the current personal allowance threshold has been frozen, there are concerns that pensioners will have to pay tax on their pension by 2027, when it is expected to cross the £12,570 threshold. However, under the proposed triple lock plus, pensioners' personal allowance would increase in line with the state pension, meaning the state pension will always be below the tax-free threshold. Supposedly, the scheme will save pensioners £275 by 2030. The latest energy price cap was announced last week, taking into effect from July. An average household's energy and gas bill will be £1,568 a year under the new cap, falling by £122 from the previous period. Due to this reduction, energy prices are now at their lowest levels since Russia invaded Ukraine in 2022. However, prices still remain roughly £400 above pre-pandemic levels. Standing charges have remained the same, though Ofgem are investigating the way they are calculated and deciding if this should be changed. New research by the Chartered Trading Standards Institute has revealed that over 2/3 of pints of beer and glasses of wine being served in UK pubs and bars are short measured, with 70% of the sampled drinks containing less alcohol than advertised. The study found that beer was typically under-poured by 4% and wine by 5%. They have calculated that the shortfall costs the average beer drinker about £88.40 per year and the average wine drinker around £114.40. With alcohol prices rising and the cost of living pressures keeping a firm hold on people's wallets, it's not easy to be able to afford to go out for a drink. But being short measured on top of this is certainly a kick in the teeth for many patrons. Trading standards have called on the hospitality sector to ensure consumers are getting value for money, though it's difficult to say when this will be implemented. The UK's Competition and Markets Authority is investigating the veterinary sector amid concerns that pet owners are overpaying for treatments, after it was estimated by the Office for National Statistics that the cost of pet services has increased by around 50% since 2015. The inquiry will look at whether consumers are getting the right information to make informed decisions, the level of profits earned by vet businesses, and whether the regulation of the market needs changing, among other things. They are considering measures such as capping prescription fees, forcing firms to provide certain information to consumers, and ordering the sale or breakup of businesses. Royal Mail is under investigation by Ofcom again after only 74.5% of first-class mail was delivered on time last year, falling rather short of their 93% requirement. Ofcom may impose a financial penalty if Royal Mail cannot provide a reasonable excuse for this shortfall, as it would then be considered as a failure to comply with their obligations. Last year, Ofcom issued them with a £5.6 million fine for failing to meet delivery targets. In response, Royal Mail's owner has said that they improved quality, won back customers lost during industrial action, controlled costs, and delivered Christmas for their customers. Thank you so much for tuning in to this week's episode of Tax Tidbits. Don't forget to give this video a thumbs up and hit the subscribe button to stay updated with all of our videos. See you next time.